Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
Dun, 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 dun. Welcome, everyone,
Dun-dun-dun-dun.
to episode 150 of the AJ Brown Show. My name is Cyprian
Fireworks.
Francis,
Fireworks.
and with me, as always, Mr. AJ Brown. AJ, I can't believe that we've made it to 150 episodes of talking about premium selling, options trading, the week to weeks of what's going on in the market. How are you feeling? You know, today's a celebratory day for us, I think.
It really is. I mean, we're just under 3 years of doing this, and people comment to us on our comment line all the time how helpful it is, Sip. So we'll just keep going, I guess.
We'll keep going, and the show's been going on for roughly 3 years, but you've been teaching and
Oh, gosh.
educating traders for over 20 at this point.
Mhm.
And so we've got a long ways to go, but we're excited for the new viewers. We're excited for everybody that's tuning in. We've got an awesome tool, a new tool that we're going to be unveiling that
Yeah.
can help a lot of our viewers.
Yeah.
But with that, let's dig into what's going on in the market this week, because I'm feeling the optimism. I'm feeling like people are shrugging off the sell-offs. The markets are starting to come back. What are you seeing? What's drawing the attention this week?
I mean, yeah, after last week, there is a heck ton of bargain buying. I mean, there hasn't been very much, more news that people are biting on. We're seeing a big increase in large caps. That means money's flowing back into those plays like Tesla and Amazon. Nvidia really made a big jump this week. But I wonder if it's just moving back into, these ones that have been oversold. I mean, like I said, there hasn't been any news really. I mean, you take a look at the economic calendar, and sure, on Wednesday we had our consumer price index, and on Thursday we had our producers price index. Layman's terms, that's retail inflation and wholesale inflation, and they kind of came in where they were expected. When you take a look at our Fed Watch tool, I mean, this is what we're seeing right now. But just yesterday, this has been flip-flopping. This is basically what investors have priced in for this rate drop or rate cut that might be happening next week. The Fed has alluded to it. And as you can see here, it's about 50-50 today. Yesterday, it was slanted more towards just a quarter point rate drop. But right now, is the Fed going to drop a quarter point, or are they going to cut a half point? I mean, the Fed has continued to say, Sip, that things are measured. And so, I'm actually putting my credibility into a quarter point rate drop, but you can see the market is kind of unsure on what's going next. But, no real news, and that caused some buying this week.
Although the inflation news is kind of one of the main drivers, right? And inflation was, for the most part, flat,
Calm.
right? It's continuing to kind of stay in that range. So inflation isn't a big metric to drive, Fed. Employment could be the next one, right?
Any sort of weakness. So remember, the Fed has this dual mandate. Not only do they have to keep price under control, and let's keep it clear, the inflation is more around the 2%. It's actually closer to the 3% target, or 3% number, but that's very close to that Fed target rate. That still means things are inflating. It means that they're inflating at a slower rate, right? We don't want things to actually contract, right? We don't want it to go below zero and things to contract. We just want it to be measured. We don't want it to be up in the 6% or 8% numbers that they were a couple of years ago. We want it to be down at like 2%. And it's between 2 and 3%. But you're right. The other mandate of our Fed is this whole employment thing. And, they have to, their goal is to keep as many people employed as possible. And if there's any weakness there, then the Fed's going to, want to take action.
Awesome. And do we want to look at where the markets are kind of in relation? Because I saw a tweet today that we're only 1% off from our all-time highs. And
Yeah.
so that speaks optimism when I see something like that.
Yeah, there's definitely this resistance level that we're approaching. We got a reversal, SIP, and I was expecting this reversal to come after a little bit more of a pullback. When we use my favorite retracement analysis to make sense of things, we start to, I'm going to throw my rulers. Everybody likes to see my rulers. I get lots of comments on my rulers. When we pulled back to basically just the center zone or the halfway mark of the previous retracement, that caused us to kind of recalibrate our look at things. And so basically you can see here that according to this analysis we use, we basically in the beginning of August started on a new path and kind of finished the old path at the end of August. And we're seeing where we go next. Now, I wouldn't be surprised if we kind of get another reversal around the all-time highs, which is around 5,650, 5,665. That's the zone I expect us to get, another reversal at. I don't expect us to get up to the 5,700 range, which would trigger us to start thinking that people are going to start piling into the markets again. In fact, you're still seeing gold's at a new all-time high around 2,600. Let's just take a look at that really quick, because I don't want to be misquoted here. If I pull up, my favorite CNBC lookup tool here and pull up gold, I think we're trading around the 2,600 range. Let's take a look. Yep, $2,604.20 is where we're currently trading with gold futures. So, there's still a lot of trepidation. It just so happens that things sold off, especially in those big name stocks, so much last week that money just kind of naturally flowed back in. I wouldn't get too excited about, kind of a bull market forming. If anything, I think we're still in this sideways chop as we're trying to figure out the difference between quantitative tightening, interest rate drops, the new presidential election. There's a lot of confusion. There's a lot of money that maybe wound up in the markets over the last 6 months that really shouldn't have been there. So that's kind of fizzling away. So I expect, if anything, some sideways chop. I'm also paying attention to any sort of consolidation SIP that might be forming. That would be a whole different take on things. It's a little too early to say that's happening, but I don't expect us to go much higher than about the 4,600, 675, 650 range.
Yeah, and chop seems to make a lot of sense when you think about all the things coming down the pipeline, right?
Yeah.
I mean, we had the second presidential election this week. Who knows if that is actually going to have an impact on the market? I do think whatever the Fed is going to be coming out with next is going to be dissected very thoroughly, and they may take out 2 or 3 words that are shocking that'll move the market, right?
Yeah.
But sideways chop is kind of what we're setting up for, but that's not bad for your strategies, right? That's not bad
No.
for the things that the members in the community are doing, right?
Not at all. In fact, this is music to our ears, right? As an options trader, especially as an end of day options trader like we are, you can pretty much apply any options tool to any pattern that's setting up. And the trick is just putting yourself on the correct side of the equation, right? Right now, people are buying options in order to hedge their bets. And so what we want to do is put ourselves on the selling side of things, because people are paying top dollar for these type of insurance policies against their long-term bets. If we're sellers, we're putting ourselves in a position to really make a nice income on that. So that's the perfect time to be doing that. That's the stuff that we do in our program. I mean, that's what it's all about.
That's what it's all about, and that's what we're gonna go over the rest of the show. We're gonna go over some examples. We've got your pick of the week, we've got our speed round,
Mhm.
and we've got your daily workshop.
Also, one thing I gotta say thank you. Last week we did that big segment on what's going on with the long-term bond rates, right? And we talked about, how do we factor out quantitative tightening, which is the Fed selling these bonds, which may be artificially lowering their rates and creating that thing that economists have been confused about, right? Because typically, when the long term rates are below the short term rates, we start to think, hey, is a recession around the corner? But I've been saying, hey, quantitative tightening may be artificially doing this, creating this scenario that we've never, ever seen before. And I had a whole bunch of mathematicians from this show reach out to me and help me understand how to factor out this artificial influence of and we haven't narrowed it down. As soon as we figure it out and I can present something, I definitely will come on this show and do that. But I want to just thank the possibility of this show, 150 episodes, that we got the feedback that we solicited last week. Sip, it was awesome.
For sure. I'll try and pull the clip and add it in the chat as well, because it was a very interesting analysis in a perspective that I don't think a lot of people are talking about.
No.
So looking forward to the mathematicians on that to see how much we've inflated this economy with
Sure.
with this quantitative easing, this new innovative tool that the government has created. So that's the world that we live in, right? Those are
Yep.
the parameters that we have to operate in. So with that, I did just throw the link to the free daily workshop in the chat. So anybody that hasn't checked that out, head on over there, sign up. We're going to take a short break. Just a quick reminder, we are live. So if anyone watching has a question, comment, concern, throw it in the chat. We'll see if we have time to run through it. Otherwise, we're going to take a short break. And then we'll be back with our trending topic, which is pretty exciting because I think it's something we can discuss for a while, and unveiling our awesome new tool, the new feature that's going to
Yep.
help all of our engaged options traders do a little bit better in the rest of the year if they utilize this tool. So we're going to take a quick break. Sit tight. We'll be back to talk about AJ's awesome new tool.
Yep.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. I do want to preface that as someone in the background, I'm seeing the awesome things that AJ and the trading community is building, and so there's a lot of cool stuff in the pipeline, some tools, some indicators that are all geared towards making this process of taking the information that we talk about, making it a little bit easier to digest and to implement. And so with that, AJ, we want to unveil your brand new options lookup tool is what we're calling it. So what is the secret sauce behind it? What drove you to, wanting to create this tool in the first place?
Well, so what is an options lookup tool? Let me just show everybody. So this is a tool that we can use to look up historical option prices as well as a lot more data. Like say, for instance, you can see here, this is the demonstration of the tool. You can type in any ticker symbol you want that's optionable. So I've got Apple here. Let's put in NVIDIA, NVDA. I'm going to click submit. And so it pulls up the option chain, and you can pick any lookup date. We're filling in the data as we speak. By the end of the weekend, we should have at least the last 2 months, and we're trying to get the last year's worth of data in there. It takes a little bit of time because there is about 1.5 million lines of data per day of options data that's generated. So loading in 1.5 million lines of data, it takes us a little bit of time for every day that we're loading in there. And plus we're ironing out a couple of kinks. But here's the cool thing. I created this for my program participants, but I'm going to make it available to the world. What this is you can look up any expiration date that you want on any date and find not only the information of, for instance, what the bid, the ask, the mark, the volume, and the open interest were, but check this out. Everybody likes to look at the Greeks. So say, for instance, I want to take a look at the Greeks. Now I've also got at my disposal implied volatilities, the deltas, the gammas, the thetas, and the vegas. And then check this out. This is my favorite. I can also pull up price components. So one of the things that we do, especially in our program, is we like to look at how much intrinsic and extrinsic value there is in each option. So here's the intrinsic value, here's the extrinsic value, and here's something that you just can't get at any other tool. Even the tools that are available for pay now is what percentage. So you can quickly look at any of these options and determine exactly what percentage is intrinsic value, what percentage is extrinsic value. You don't have to pull out your calculator and hope you get the calculation right or use some sort of offline tool. It's just right here very quickly. Say, for instance, you're trying to pick an option that is got a lot of intrinsic value. You want it to be a stock substitute. So say, for instance, I'm going to look at all the strike prices on NVIDIA, and I'm going to go, and there's a lot of strike prices on NVIDIA. I'm going to go pretty far out in time. Let me close this one right here. I'm going to go over here, and I'm going to say, what about the April 2025 expiration? And now you can see right away, right here, it says 95.7%, 4.3%. You can basically pick an option that's deep enough in the money that it's going to act just like the stock, far enough out in time. Or what if you want an option that is all extrinsic value? It's all premium value. Say, for instance, we go to the September 20 expiration, and we're looking, I'm scrolling down you can see NVIDIA's got a heck ton of options. I'm scrolling down all the different options, and I'm looking for one that's almost 100% intrinsic, or extrinsic, time value, but still deep enough in the money. And I've got both the calls and the puts. The reason why we created this tool is, number one, some of the most available tools out there all of a sudden were not free anymore. They became for cost, and they were, the owners of these tools know how valuable they are, and they're really jacking up the prices, Sip. These things are like $100 a month, way more than actually it costs for them to host. They're totally preying on the public. That's one reason why I wanted to create it. The other reason is there's a lot of these tools built into some of these platforms, like Thinkorswim has their ThinkBack. And number one, since Thinkorswim was taken over by Charles Schwab, a lot of my program participants that are in other countries like Canada, Australia, New Zealand, they don't even have access to Thinkorswim anymore. It's no longer even a possibility for them to use the tool. But then the other thing is since Charles Schwab has kind of taken over Thinkorswim from TD Ameritrade, their tool doesn't even work that well anymore. Well, that's been one of my pet peeves. Like, for instance, I'm pulling up that NVIDIA again. And if I look at NVIDIA, the chart, NVDA, and I pick, for instance, a random day, like let's look at September 6th. September 6th, the chart tells us that the price closed at 102.83. But if I go to the lookup tool and I look up September 6th, and I'm going to do it right now live. Look, it's saying it's 107.21. That's way different than what the chart says, right? The lookup tool is telling us that the price was 107.21. When I look at September 6th over here, it says the closing price was 102.83. So which one is it? Their data's got bugs in it. So I wanted a clean, truthful tool that people can have access to for the pennies that it costs for us to host it, and that has even the components like that percentage thing that we didn't have before. So I just decided to create it myself.
And so I kind of want to get an understanding from a newbie options trader, or like right. So the value of this is that because there's 28 different ways to trade options, when you're looking to do one of those strategies, the value is in having some of these nuances of theta or intrinsic value that make that trade a little bit sexier, because we can validate that there's more margin or room in this one error and there or one area, and the more time, right? So this is a quick way to go and kind of double check that you're getting the most, or you're putting on, it's checking all the boxes. Is that kind of a good way to look at it?
Yeah, validation was the best word you used, because we're talking historical lookup, right? So, having this, plethora of information available to us in the option chain, right? So many lookup tools are for stocks or the underlying symbols, but option traders need to access historical data on options, whether it be for risk management, which is a key reason why you'd want to look at it, back testing. Maybe you're trying to trade implied volatilities and you need to see the implied volatilities of a particular option through time, and scrolling and scrolling and scrolling is a pain in the butt on other tools. And it's just a matter of accuracy, right? Being able to get this accurate historical data so that you can do your analysis without getting fumbled.
And looks like we've already got some love from it. Doug just said this is really helpful, especially for Canadians who can't use Thinkorswim. So thank you, AJ. This is kind of the first evolution, the first rollout of this. So
we're going to be
imagine
adding so many more features. We got some filters so that you can separate out your weeklies from your monthlies, from your quarterlies, from your leaps. So we're going to have all kinds of great stuff in here. Right now, we're just loading the data, and we're going to get it out there as quickly as possible. Get it to my premium selling workshop, participants, but also make it available out there for the rest of the world. The key is well, I'll let you explain it.
Well, I don't. Well, before we do that, there is a
Okay.
question. So Stephen is asking, auto connect to your PSEWs. I'm not sure exactly what.
Premium selling worksheets. That's one of the tools that we give our program participants. So yeah, having this data available so that it pre-populates into the premium selling worksheets is definitely part of our progressions, and it'll be one of the iterations next. But the key right now is just to make this accurate data available to all the folks out there who need historical options lookup and don't want to be paying $100 a month just for something that pretty much is out there to anybody who wants to, access it. It's just so hard to find. And the people who have it are really, taking advantage of the population out there. So I wanted to make it, I want to basically be that person who makes it available to everybody out there.
And that's exactly what we're doing in this first sort of beta rollout. Anybody that's watching live, anybody that's watching the replay that wants access, leave a comment on Facebook or YouTube. Leave a comment. We'll respond to you with the link, and we'll continue to evolve this, because like you said, there's a ton of data, but also maybe we can get some user feedback from some of the initial users
Absolutely.
to improve it. But like you said, this is not a very readily available tool in the
No,
marketplace. So
no.
kudos to the dev team, kudos to
Yep.
you, AJ, and the trading trainer community for coming together and rolling this out. We'll continue
150 episodes, perfect time to do it.
we'll continue to evolve it and make work on making it SEO friendly, because if people are searching for this tool, we want to be able to come up and say, hey, we've got it for you here at Trading Trainer.
So definitely, everybody, please comment, whether it be in the Facebook or the YouTube, wherever you're watching this, please comment, and we're going to personally go in and respond to your comment with a link where you can get your beta access, right? We do plan on actually, if you're not part of our program, if you're not part of that premium selling program, we are going to actually turn this into a for-cost tool, right? And I know I just got through saying that what we're going to do is we're basically going to charge you what our data feeds are. It's going to come out to somewhere between about $9 and maybe $19 a month, which is what the actual data costs, not $100 or whatever these other folks are asking you to pay. And it's going to be accurate data. But right now, we just want the beta testers. So if you just comment in the YouTube or comment in the Facebook, wherever you're watching this, we're going to reply with a link so that you can get access. Again, if you're part of the program, don't worry, you're automatically going to get access. But if you're just somebody out there who needs this lookup tool, I know there's so many of you out there, we'll just ask you to comment. And as soon as I see your comment, we'll reply with a link where you can go ahead and get your beta access, get in there. And of course, anybody who's got beta access will be offering you special details on when it goes public and live, how you can get it at a discount.
Hey, you might not be the most boring options trader in the world after rolling this.
Oh,
This is
I
pretty
hope
exciting.
I don't get that popular. I like being kind of under the radar.
I am curious to see if maybe in your pick of the week we can maybe reference this options tool to see how one would use it in like a
Sure.
real case scenario.
Yeah.
So maybe we could dig right into that now. Everyone, once again, options lookup tool. It's out. We're looking for some beta testers. Leave a comment. The Trading Trader community, we're going to be getting it out to you very soon. Exciting stuff. But with that, let's get back to some opportunities. Let's get back to some ways that we could utilize these 28 different ways to trade options in this upcoming choppy market to potentially find some winners. And so this week, this is a brand new name that must have, at least from our show, you may have it on your watch list. But AJ, your pick of the week this week is COTY, ticker symbol COTY. Why do you like this one?
Okay, so COTY is the parent company of a lot of cosmetic brands. We're talking like CoverGirl and just brands my wife would know better than I would. As you can see, I don't really have anything cosmetic going on. You get what you got, Babyface Brown here. But that's about it. But it's all those companies that, like, for instance, when you walk into the drugstore and you see that whole makeup aisle, a lot of them are part of this COTY umbrella company. And I'm seeing that COTY, first of all, COTY's at a great price, Sip. It's affordable for even folks that have a smaller portfolio. You don't need to have, thousands and thousands of dollars to be able to trade this, because it's trading down here in the $9 to $10 range. We're also seeing that a level of support is forming at about this $8.75, $9 level. And I'm seeing just today, we're getting a hint from one of my free indicators that a bottom is being found. We'll look for follow through in the upcoming days. I also love the options chain. We just got through talking about, options. You can see here, probably the option that I'm most interested in for a protective option on this would be the January or February option. And you can see that these things are trading every dollar, which gives me kind of that granularity, SIP, to be able to construct that perfect option strategy in order to trade this for profit. And you can see that there is some liquidity, especially at the money and slightly out of the money options on both the call and the put side. As well, if we're going to be selling premium, I'm looking at the September 20, and this is being traded pretty nicely at the money numbers, both the September and even going on to the October, because remember, the September option is expiring just next week, next Friday. So you may already be thinking about the October options, and there's premium to be had there. And there's substitute options, right? You can go pretty far out in time. We can go out to the January 2026 option. And you are asking about using the historical options lookup tool. You can pull up any day on Cody once we've got all the data loaded, and you can then pull up and see what it was doing, for instance, on the September 11th or on those different days. And we may want to do that. For instance, if I was going to be creating a trade plan on Cody, I would probably be looking at what happened on September 5th, because on September 5th, we can recreate a trade that would then give us the price targets we were looking for, as well as, help us calculate our position sizing. We could also look at implied volatilities and track them through the last few days and determine if, we would want to, trade implied volatility. Is the implied volatility going up? That means we'd want to be sellers. Is it going down? Perhaps we'd want to be buyers. There's all different ways we can use that lookup tool. So, my big thing on Cody right now is it looks like it's forming a bottom. It's testing the bottom twice. So I'm interested in either buying shares of this stock, or I'm interested in buying the substitute call, which there is some. The substitute call I picked out was the 2026 $5 call. It's not necessarily all the way down at my 5% target of out of the money or premium, but it's pretty close. And I think I'd use that $5 call versus the $4 call, or one that's deeper in the money. All to say, this one looks like it's setting up. I don't want to pull the trigger till I get follow through. So nobody jump in on this trade to buy the stock until you get follow through on the bottom being found. But SIP Cody looks like it is primed for us.
Yeah, and I always love seeing these names come up that are less than $10, because it helps those smaller portfolios. You not as much risk involved, not as much capital needed. You can still get the percentage return, and cosmetics. It just feels like an industry that a lot of women put money into making themselves, and I don't see that going away anytime soon. So maybe
in fact, any business that actually, works with something that's a consumable, right, where you come back and keep buying more because you use it up. That's a good business for us to be investing in. And I just wanted to point out that substitute option that I was really interested in. It's going for $4.60 a share, or $460 for a contract. That's affordable, All
right. COTY, Cody, AJ's pick of the week. Also added the link to the free indicators, because anybody that's watching, you'll see the magenta and the light blue arrows that are one of these useful tools that AJ implements in order to kind of gauge, when he's going to jump into a trade. So the link to that is in the chat. We've also got it in the scroll bar. It looks like AJ's pulling it up.
This is our webpage as well, of all of our links. If people are interested, and we're going to add one to, of course, the options lookup tool. But if you want to get to that free workshop that SIP showed us the commercial to, we put a link there. If you're interested in finding out about the program or even our coaching, if you want to go to any of our socials, you want to get the free indicator, you could just go to links.tt4.me. That's another good link, Sip. I don't know if you want to throw that one in there.
Well, it's just we just have the / indicators. So if you just remove the indicators,
And add the links.
Yeah, I'll go ahead and paste that in there as well. But yeah, lots of very useful stuff, and I naturally gravitate towards that magenta or that blue arrow to kind of gauge whether I'm feeling good about the direction, and it's been pretty consistent in a lot of the episodes that we've done. So get access to it, get it on your platform, start using the options lookup tool, and have this awesome toolkit of ways to make you a better investor, a better trader. Just feel more confident about putting on a position, not having to look at your screen, going out for the night, enjoying a good show, coming back, not having those day-to-day stresses that I see a lot of investors and traders, dealing with and going through. So AJ's pick of the week, COTY, Cody. All right. We've got 3 pretty interesting names, AJ, from the user base this week in our speed round, and they want your take on what you would do in their position. So
I'm ready.
Let's dig right in. Back in your old neck of the woods, this is Andrew in Boulder, Colorado, interested in your old employer, Hewlett Packard, HPQ. That's a name that we discuss very frequently. What do you see in AJ?
I see what you're seeing. I see that Hewlett Packard, number one, after in April, May had kind of a gain, has now nestled once again. And this is one of the things that you want to hear a little story. One of the reasons why I got into premium selling is in the late 90s, working for Hewlett Packard, I had received all these stock options, and also we had they called it an employee stock purchase plan, where you could use some of your paycheck and automatically purchase Hewlett Packard stock. My qualm with it back then was it kept going in sideways, choppy patterns. And at the time, all I knew how to do was buy the stock and hope it appreciated. But the investors that are attracted to Hewlett Packard are not looking to make it go up or down in price. They're actually quite happy with Hewlett Packard's dividend, right? The company's been around since, coming up on something like 80 years. It's been around. And so the scoop is I had gotten frustrated about the sideways chop. So I figured out how to trade the sideways chop, how to take all those stock shares and those options that I had been given and turn them into actual profit despite the stock not really appreciating. So we're back into one of those sideways choppy zones. And I see that we're coming down for a bottom. It hasn't signaled completely yet. So again, you want to exercise discipline and patience here. You don't want to start doing trading until you actually get the back-tested signals that you've identified. In this case, we're using our free indicator. We're looking at the fast MACD calculated on volume weighted average price instead of on close. So I haven't gotten that light blue arrow that Sip was talking about yet. So I want to wait to get that. And I want to get that after the market's closed. I want to evaluate and see that is there after the market is closed. And then in the subsequent trading sessions, just make sure that before I place the trade, that I'm getting that daily follow through that I need to feel like, that signal is verified and not just an end of day kind of apparition, right? So with that said, I see what you're seeing. I see a possible bottom. I see a level of support. I like the price. We just gave out our dividend. We're showing positive earnings. This is what the reason why we feature this company a lot is not just because I used to work there 25 years ago, but also because it's a great symbol to trade premium on. It's the number one symbol that was in my portfolio when I was learning, and it's still one of the biggest holdings that I have and I sell premium on a monthly basis. So yeah, I would look for an opportunity here. If you're not already in a position on HP, look for an opportunity when you get the signals and when it gives you that trading day follow through. Look for an opportunity to buy stock or buy substitute options. And again, you want to go at least 8 months out in time, and you want to go very deep in the money. That's where my lookup tool would be really useful, because the lookup tool will tell you very quickly if you're deep enough in the money to have a stock replacement. That's where you get something that'll behave like the stock, but it'll be much cheaper in price, giving you a little bit of that leverage, but it'll still move dollar for dollar with the stock. Lookup tool is going to make that super easy to determine what's what. So yeah, I would wait for the signal, buy the stock or buy the substitute option. Then as it travels up, if it stops in the $36 to $38 range and reverses back down, sell your call premium, buy your protective puts. If it goes higher than 38, 39, and it starts heading towards that $40 mark, you're in a directional trade. Just look for the best opportunity to cash out at the most profit. You got a nice trade going on here. I hope you make the most of it. Andrew.
Yeah, and it seems as if Hewlett Packard's kind of made this bump up to this new like level, and it's finding its range there. So yeah, Hewlett Packard, that's a name that we're definitely gonna bring back up at some point in the show, where AJ will have some story from 20 years ago and they discovered the internet. And
that's what old people do, man. They reminisce like it was just yesterday.
All right, Hewlett Packard, Andrew, thank you for that. We're going international here, AJ. Moving to the UK. This is Todd in London.
Okay.
Interested in American International Group, ticker symbol AIG. This is the insurer, right?
Yeah, remember AIG about 15 years ago during the 2008 recession? This was the one who insured all those traders against the market crashing, and then of course, yes, that's them.
Collateralized mortgage obligations, default
remember that?
swaps, and then they put it in the movie like the short sellers, and nobody knows what they're talking about.
Yeah, nobody thought that the S&P needed to be, they offered insurance, and then when people actually needed them to pay out, they weren't able to, right? Because everybody needed them to pay out. Anyway, AIG's back. They're back in the insurance business. They've got, as you can see, insurance when they don't have to pay out is quite a profitable business to be in. And you can see they're giving dividends to their investors. Trading in that $70 range, that's kind of pricey. I can see why you're interested in it, Todd. It's forming a bottom after a little bit of a sell-off. This signal was a little bit difficult to, this top signal was difficult to act on, because as soon as you got the signal, you were already down at the bottom of your channel. But I'm guessing you're interested in probably buying this. And I would say that might be a good idea. I'm going to go back a little bit further in time, Todd. I'm going to go back a whole year. So you can see AIG had some gains, and then it's been sideways channeling ever since probably, the end of March. So, okay, AIG is in this sideways move since the end of March. That gives me all the reason to believe that this would be a good premium selling position. So, yeah. Again, I'd wait for the signal. I think that's kind of the theme of today, that things are bottoming out, but haven't quite given us the signal yet. You want to wait for that signal, exercise discipline. And then if you wanted to buy shares of stock or a substitute call option, you could totally do that. And then again, as you go up in the channel, you let that appreciate. If it stops short somewhere in the $78 to $80 range, that's when you sell call premium, buy your protective puts, let time go by, create an income stream that way off of owning this stock, or owning the substitute option. If it soars past $80, then you've got your directional trade and you'll make it work that way. I think you've got something there with AIG.
A little bit more on the expensive
Yeah.
side at
Hopefully you got a
72.
bigger portfolio.
But a little bit of international flavor there. Thank you, Todd. Moving on from one insurance name to another insurance name. This is Liz from Chicago, Illinois, interested in Lemonade, ticker symbol LMND.
I feel like Liz brings up Lemonade periodically, which is great. Lemonade is that online, they use AI in order to help people with their insurance, and they have insurance ranging from home and auto to pet insurance. They offer everything, but they're kind of taking out the traditional model of how you go to an insurance agent who's part of, they've got that all to push to one side, and instead they're using kind of an AI model in order to help you get your insurance at a discount price. So great in concept. You can see consolidation since that earnings back in November of last year. So about a year ago, a little less, maybe 10 months ago, they gave some good news, popped it up, and then it kind of just stalled. And it wasn't even trading in a range that, would make us think we would want to sell premium against it. Instead, we were probably looking at this like potential breakout, and it looks like it finally did. And you can see as I look at the earnings, this is still a proof of concept in my mind, right? If you are in the insurance business, like we just got through saying with AIG, and you're not turning a profit, either you're trying to spend a lot on marketing costs in order to get people, you're changing minds here. Insurance has been sold the same way for hundreds of years through kind of a this model where you have brokers and then you have insurance salesmen, very much like the real estate. And so it's going to take a lot to interrupt or disturb that and get people. So maybe this is because of marketing costs, maybe because it's not working well. I'm not sure, but they haven't been able to show a profit yet in what is usually a very profitable industry. With that said, and with not really going into Lemonade's business model, investors seem with this sideways movement without any chop, they seem to be sitting on their hands saying, what next? What next? And I see there was possibly a pop, and then earnings came and it became a drop and brought us right back. And so I guess my question is, do you want to jump in on this very speculative play? We talked about this, I think maybe 6 months ago, because I remember your name and I remember this exact insurance. Listen, Lemonade formed a top just recently and it gave us follow through. So let's bring ourselves more to the current. It gave us some follow through, which means we'd probably want to think about shorting some shares of Lemonade or buying some back month put options and then letting that appreciate as the underlying symbol goes down. So whether you short the stock or whether you let the put options profit when the underlying symbol goes down. So you could do one of those things, but I urge you to do it very much with owning a small part of your portfolio. This just seems like a very speculative play for me. Let me just check one more thing. I'm sure we checked this a few months ago, but I do want to check to see, okay, it's trading every dollar and there is a little bit of liquidity. So there are people trading these options. But again, let's just, this is one of those fun plays where we maybe do a single contract, but let's not put a portion of our portfolio into this Lemonade trade because I think it's a little bit unstable. And I like stable.
Yeah, if you zoom out again a little bit, man, there's a lot of chop in that range. I mean, that's almost like 3 months of it barely moving $2 or $3.
I mean, there's a lot of sideways movement, but not necessarily enough chop to kind of let those intraday traders profit. When I think about sideways chop, I think about establishing a nice thick level of support, nice thick level of resistance. When I see that it just stays at the same price sip for months, it makes me think that there's some uncertainty in investors and that they're at the moment's notice either willing to buy more or sell more. But that creates a very unstable environment for those of us that are looking for predictability.
Which is kind of the name of the game of being a successful investor,
You know
right?
what? When the lookup tool is available, I would, if I were you, now I'm just coming up with brainstorming here, Liz. I would go back through the lookup tool and just look up each day and pay attention to the implied volatility and just see, is implied volatility, has it been slowly creeping up? Because sometimes that happens as investors are waiting to see what happens next. They start to get kind of uncertain. And so what they do is on the side in the options market, they start buying options to protect themselves. And so you might notice that option prices have been going up as the underlying symbol continues to go sideways. And so that tells me that people are hedging their bets. And maybe if that's the case, we want to get on the side of, selling options to these people in order to, be on the correct side of the equation. A lot of stuff you can do with that lookup tool when it's available. I hope, Liz, you're watching this and you comment on either the YouTube or the Facebook so that we can get you access to that tool.
Yeah, and I actually have some personal consumer experience with Lemonade.
Oh, yeah?
And the technology of the ease was nice, but I was a little, well, also it was pet insurance, so I think that's kind of like one of those not so traditional insurances. It's kind of like new. But yeah, I didn't get the consumer satisfaction that maybe some of the other insurers, but hey, maybe that's what they're working on and evolving. So thank you for that, Liz.
You can't piss off pet owners. I'm telling you.
I saw a tweet today that said that we're now spending more on pets than we are on children.
Yeah. You'd be, when it comes and you're at the vet and they're like, what will you do in order to save your pet's life? People say anything, right?
I mean, I was surprised. They were like, blood test this and surgery that. And I'm like, I don't know. Like, I'd rather, I don't, that's more human stuff. Like, I don't know. I love my dog and I would never want to put him in a situation.
I can't imagine you having any reserve paying the most for your dog. I know how much you like your dog.
But that's why we exercise. We get our share of exercises. We're eating the healthy foods, right? So
I know about the food. Yeah, your dog. You ought to send me some of that dog food because I know that he's eating even better than I do. Not to bust on my wife's cooking or anything, but I know what you feed your dog, and that's pretty awesome, man.
And I would eat the food too. Like if I was hungry,
it's like human food.
And sometimes he doesn't want to eat it. And I'm like, yo, dude, like this is good food. Like, what is your problem today?
Yeah.
Right.
Sip really likes his dog and feeds his dog well, guys.
Well, that's what you do when you're a single guy in Los Angeles. Yeah. You hang out with your dog and you go on walks. All right, AJ, episode
Chick
150.
magnet.
Well, you'd be surprised. He's barking more at the chicks than he's like, hey, come pet.
Oh no.
Like, hey, we gotta have a conversation. We gotta work on how we're gonna do this. Episode 150 in the bag.
I can't believe 150 episodes. That's awesome.
We're mid-September.
Okay.
Do you think we're gonna start to get some volatility? I mean, I know things have been volatile, but like now we're gonna start wanting to move one way or another. We're trying to piece this information. What is on your calendar? What are you looking at?
It was really interesting to me. You get these initial spikes. Like we had that debate, right? Which was very interesting. I've only really watched some clips of it. I haven't really tuned in. I'm not that curious about that stuff, but it was interesting. The day after during amateur hour, there was a huge sell-off because I guess a lot of people said that the Kamala Harris, did very well, and she's not viewed as business positive. But you know what? That happened during the amateur hour, the first hour of trading, and by the end of the day, things were up, which makes me think that, you're going to get a lot of the initial money or amateur money being volatile. But I actually seem to see that the more stable, like hedge fund, mutual fund, and pension fund traders, they seem to be more on the steady Eddie ease through the rest of the year. So, there's more amateur money in the markets than ever, which is great. That's because of things like Robinhood, making it the barriers for everyday Joes to get into the markets without help from brokers or from traders. That's great. So we see a little bit more of this kind of volatility on top of the surface, but the big money traders seem to be pretty solid. And so I'm very excited about the rest of the year, especially being an options trader where I can take advantage of that underlying current. So, if folks are at all worried about what their portfolios are going to look like, they ought to come over and entertain our program, SIP, because we've been, making successful traders for years, especially during times when there's uncertainty. And that's actually when we thrive. So I'm actually very positive about, us as program traders and trading the premium for the rest of the year. So that's where I'm at right now.
Yeah, because we don't really care if the market, we don't want the market to crash because it kind of has a rollover effect into a lot of things. But, one way or the other, at the end of the day, the premium selling strategies are kind of meant to chip away in the percentage returns. And
good way to say it.
I know we've had some examples where in like 30 days, less than 30, two or 3 weeks, it's like 10%, 15%, 8, like those types of returns on your trades are realistic. And so that's, why you created the program. That's why we have the audience. That's why
we're making these tools, right?
Yeah. And there's more in the toolbox. There's more in the dev
more in the can.
As we kind of get into this tool-based economy, right? Like traders have a lot of tools to access, but you're vetting them. At least you're applying these 20 years of experience into it, and I think the initial feedback is the people love it. I'm excited. Once again, the new options lookup tool. If you want access to that, leave a comment in on the video, and we'll send you the link. Otherwise, if you're a program participant, look for an email coming soon at some point that'll say, hey, you can access this here. It seems like nice. We're heading into a positive ending week, mid-month. AJ, thank you for tuning in. 150 episodes showing up week in and week out, whether you're I do have. How did that trapeze thing go last week? Was that a successful show?
Yeah, that was quite amazing. My daughter was beside herself, seeing these people. They literally, and the nighttime shows, it just makes it worth it, makes those road trips worth it. It was great.
And that's kind of the beauty of being able to be an investor and have a life and travel and experience things while still getting back
wherever you have an internet connection. So, and we do everything after hours. So whenever you have a minute in the evening, wherever you have an internet connection, otherwise go wherever you want at a moment's notice, see the things that, it's a lifestyle that I would have never imagined I could have.
All right. Well, we look forward to episode 151 next week. AJ, we appreciate you, viewers, audience. trading trainer community, we appreciate you, and invite everyone watching to please show some love. Hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. We're working hard on getting you high quality content every week. Hit those links in the chat, get some of those tools, get access to some of those indicators, get into the workshop, and we'll catch everybody next week.
Take care, everybody. Thank you
for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button